please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hello and welcome to Halftime Report. It's 12 noon. We're halfway through the trading session and cruising along pretty well. So after the 2% rally that we had yesterday, today the markets have added on close to about 0.5%. But the key point is that midcaps, which have erstwhile been underperforming, have outperformed today. So the midcap index, let's get that up for you on your screen, currently higher by nearly about 1% with a positive advance decline ratio. And the PSU banking space not favored up until now, but there is a very sharp short covering bounce that you can see in most of the banking names today. Hi, Nigel.
Hey, Rima, that's what you said, right? The midcap index is looking good. If you take a look at the advance decline ratio as well, 3 stocks are advancing for every 1 stock that's declining. After such a big rally, you like this. You like what we are seeing on the screen. And remember, you pull up a contribution chart. The Nifty is sitting with a gain of around 35 points. But TCS alone is dragging us down by nearly around 15 to around 18 points. So if TCS was in there, and if TCS can do a bit of a recovery from the low point of the day, we could be sitting on a half a century after nearly around a double century that we saw yesterday on the Nifty. So just keep that in mind as well. So things looking good today. Good follow-through buying is what we are seeing as we speak. Vedanta, that's doing well because the dividend was announced. Remember the futures, Vedanta, that's a cash stock we should show, and it should also show the future stock. Remember, the futures was discounting a dividend of around 16 to around 17 rupees. It's coming at around 21 rupees. So that's why we're seeing that, in fact, in the cash market, we're seeing an outperformance is up close to around 2%. But in the futures, the stock is up only around 0.5% or a little less than that. So you pull up the futures plate, you'll exactly see that particular move that I'm talking about. Yeah, 303. So now, in fact, now it's aligning itself to around 21 rupees, the difference between cash.
Chatting with the big guests that we've lined up for you on the show. India Infoline has partnered with global research and fund house William O'Neill to provide research on over 4,000 Indian stocks. Nirmal Jain, the chairman of IIFL, and Stephen Birch, the president and CEO, William O'Neill, join us to talk about this partnership. Good afternoon, gentlemen, and thanks so much for taking the time out and speaking to CNBC TV18. Nirmal, if I may start with you, if you could first tell us the nature of the partnership, how would it go from here on between the two companies?
So William O'Neill has a track record of 55 years. I mean, they've been doing a lot of research and they have algorithm which is time tested for a very, very long time on a very large number of stocks. So in India also they've done their research. They set up their research unit based on fundamental and technical analysis. They are going to give us ratings and rankings for 4,000 companies. And we have seen the data. So they use a big data. They use artificial intelligence and they develop models which give very good results. So we're going to make it available to our million customers who trade. And the way technology and science is changing, I think as we go forward, quant will become a very important part of investors and traders' strategy. And I think we partnered with somebody who's got a track record which is much, much longer than the modern Indian stock markets that started after '94 in the DMAT and with the NSE. And we are very excited about this, and our endeavor always has been to get the best that's available in the world to our clients and our investors. And as Indian markets come of age, they become wider, deeper. This was much needed, and we are very happy to partner with William, and we have Stephen, who's the CEO, who can talk more about how they actually do it.
All right, Nirmal, so let's go across to Stephen then. Stephen, your comment on this partnership that Nirmal was just alluding to, and also I wanted your sense of the entire global market setup. How do you think things stand globally? Economic data is looking a tad bit better, but the equity markets on the whole?
Yes, I'll answer the second question. Thank you for having me. Globally, we're very, very bullish on the United States market and the Indian market, even though we've been through a bit of a correction, as you've been calling out and noting. Some of the strength we saw on Friday in the U.S. and in India has turned our technical indicators bullish. So we're in a confirmed uptrend. You can use, people that use the MarketSmith application can see specific names that we think will tend to outperform in this type of environment. I'll give you, to answer the first question you asked me, some history on William O'Neill. As Nirmal said, we've been around for 55 years. We've been providing MarketSmith recommendations and stock pick recommendations to U.S. investors for that long. We've recently branched into India and into China, taking the methodology that William O'Neill wrote about, and helping investors here understand how they can apply that to their local markets. So we're very excited about this partnership because it gives people that use the IIFL app access to MarketSmith research. And it's very topical, it's very timely. We use quite a bit of quantitative research, artificial intelligence, machine learning to drive our ratings and rankings. We try to eliminate much of the emotion that many investors have when they invest that cause problems. And so using this app and looking at the research is a great way for people, whether they're a novice in the market or even a seasoned investor, to really look for new opportunities at various market cycles. So we're very, very excited about this relationship we have with IIFL, and would really encourage people to take a look at MarketSmith research on their app.
Stephen, we'll come more to your market views. You just indicated that you've turned very bullish on the Indian markets as well as global markets, and the technical indicators have turned uptrend. But more about this research business in India. While India, the opportunity is huge, it's also an overly researched market. What would be your own expectations by way of investments as well as returns that you want to make in the Indian markets by way of financials?
That's a very good point. I think there are, when you say over-researched, over-brokered, there's quite a few analysts covering emphasis. Not a lot of value there if we have 40 or 50 people writing the same research report on a big firm like that. What's interesting about our research, as Namal said, we have 4,000 stocks that we analyze using quantitative research. We use a blend of fundamentals and technicals, and we merge these together using proprietary ratings and rankings. And it really gives the user this objective view of what's happening across the whole spectrum, small cap, mid cap, and large cap. And so we're very unique in that regard. So that's where I think retail investors in the United States really love our products because of that. We're not solely fundamentalists looking at value. We look at growth, we look at the technicals, we look at the general market, and we really try to guide investors to make sure all three of those are working together, that you're trading in harmony with the general market. And you'll see that when you look at this research. Should we be buying? Should we not be buying? What are the best growth opportunities in India? Where do we have the best innovation, the best entrepreneurship surfacing in revenue growth, earnings growth? The other thing I'll say about our unique approach to research is William O'Neill is the only company that uses a profiling method. And when I say profiling, we studied stocks in the United States, in India, in China, across the globe that went up 300%, 400%, and 500%. And we profiled what those stocks look like at the beginning of their moves. And we are not so fixated on models or valuation. We tell you that it has certain characteristics: great management, a great new service, a great product, a competitive moat, earnings acceleration, revenue acceleration, expanding profit margins. All these things come together very, very nicely and concisely in our research, available for people using the mobile app, IIFL's app, to really concisely look for those characteristics that represent great, great growth opportunities in India. And so it's a unique offering. It's available today, I think, on the platform, and I'd encourage people to take a look at it. And I'm very excited to be here to share this news, this launch.
Right. Talking about the markets today, the PSU Bank Index, that's really saving the day for us. But Nirmal, I want to come across to you in terms of the PSU banks. Can they be saved? That's the question that we're putting. I was just reading through your piece as well when you're talking about they can be saved, privatization or consolidation. Give us your sense of it. It's a rather interesting article, but just want you to tell our viewers about that.
So PSU banks have a tremendous franchise. So all their is very interesting because all their problems are on the balance sheet, and all their values or the intangible asset, which is in terms of loyal base of deposit holders, there are millions and millions of them, the branch network, the goodwill that they've created over so many years, it's outside the balance sheet. So if government were to privatize or make sure that maybe privatization politically may not be so easy in this year,
True.
But at least if they make reforms and they take a backseat and let them be have high quality of governance, then investors will pay for the values and pay for the franchise that they built over years. And also one more thing, that most of the problems are the past problems. Incrementally, they are improving their balance sheet. The only thing is that what I tried to argue in the article also, that we certainly can't take a very harsh approach in terms of regulatory, like removing all the forbearances that central bank was providing, or giving them time to recoup and make sure that they are not forced to report in a manner which is very, very harsh or very stringent, and also it should be moved in tandem with the government's ability to fund them. Then I think PSU banks have such base of customers, franchise, that entire value is not lost. And today, if you look at all the nationalized banks, then their aggregate market cap is just half of their book value, which is a pity actually. I'm sure that the intrinsic value is much more, but it will all depend on how government takes it forward and how RBI supports it, that how their value can be unlocked for investors. Just adding a point on this partnership that we just talked about, I think there's a lot of research in India, but this first time that we are having something which is real-time updated and is back-tested for data for 20 years and is backed by experience of 50 years in a much larger and deeper market like US. So what Indian investors, typical retail investors, and many times when there are a lot of research, retail investors don't have access to it, or they get access much later when it's dated.
Okay. Stephen, just one final question, running out of time. If you could tell us
Sorry, I just chipped in for that thing, yeah.
Okay.
Yes.
Mr. Birch, we are running out of time, so if you could quickly tell us your view on India, where it stands in the pecking order compared to the other global equity markets, and what would your key overweights be?
I think India is a fascinating growth market. I think we were discussing earlier that longer term it has some secular tailwinds because of the demographics here and some of the fundamental changes that are occurring in the economy. It's very, very exciting when I come to India. I think the infrastructure, technology, there are areas here that that are very, very interesting to us. Now, I'd say that the best thing to do, if you're rather than being a sector or thematic investor, and what's the best thing we should trade today? It's really learn about investing by using IIFL app, look at the research, and understand really the most important thing that drives investment is earnings growth. So find names, find industries that are showing above average earnings growth, and longer term, you're going to do very, very well in the market. And very exciting to be here. It's a very vibrant and exciting economy. When I look across the globe and travel across the globe, lots and lots of exciting things happening in this space.
Okay, all right. Thanks so much, Stephen, as well as Nirmal, for joining in and, in fact, giving us your quick insights, and all the best for the partnership going ahead as well. Well, the market's holding on to good gains as we speak. We're holding on to a 30-point uptake, but there are a few stocks that are seeing some profit booking. ITC, after the good run that we have, that's come off a tad bit, so just keep an eye out on that one. It's a rather heavier weight, so that's why I'm pointing that stock up, moved into the red. Moving higher, I mean, we're holding on to gains, and the 10,400 put, that's one of the most active strikes today. We're holding at around 10,450. The 10,400 put, just take a look at that. It's added nearly around 12 lakh shares. You like that in an uptrending market, when the put that's nearest on the downside, that's getting written. That's pretty good news. That's giving you belief that the bulls believe they can defend the 10,300, 10,320 odd mark. But there are plenty of stocks that are moving around, and let's get straight to our movers and shakers. Let's start off with Future Consumer. Mangalam's with us. Well, Mangalam, Motilal believes the future is looking good for Future Consumer.
Is looking good. That's what they believe, and that's because they believe consumption is looking good. So Future Consumer had both of them together. But remember what, Future Consumer just about a few months ago was trading at 80 rupees, fell all the way down to 50 rupees. And this is what perhaps may have prompted Motilal Oswal to go ahead and initiate coverage on the stock. And they have a buy rating with a target price of 76, still about 4 rupees below the company's record high. But they believe this company is well placed to go ahead and benefit from the Future Group's push on retail. Because remember, this is the FMCG arm. So for them, the number of stores that Future Retail increases, the more prospects for Future Consumer products to be sold. So this would mean that higher sales, higher operating leverage would take the profits higher. They valued the company on a 2.2 times EV to sales basis as far as the FY20 estimates are concerned. They are expecting about 6,000 crore revenues in FY20 as against 2,200 crores that the company's posted in the first 9 months of this fiscal. But the real game changer would be the operating leverage, which would take the EBITDA, according to them, by about 310 crore rupees in FY20. This compares to 38 crores that the company posted in the first 9 months of this fiscal itself. Remember, if you think that 6,000 crores by FY20 is a tall target, Kishore Biani right here on CNBC TV18 1 year ago had said FY21 they're looking at 20,000 crores in terms of revenue. I'll particularly be watching out for what their brands do because in the third quarter we saw doubling of growth for for some of their key brands, the ones like Tasty Treats and Atta. And secondly, I'll be watching out for how soon they can scale up the distribution. In the last 1 year, it has increased by 2.8 times. Let's see what they can do going forward.
Thank you, Mangalam, for that. And aviation companies like Interglobe is flying low today on the back of faulty engines, flight cancellations. Sonia, more on that?
Well, yes, it is a sentiment impact that you're seeing on Interglobe. As you rightly pointed out, the Director General of Civil Aviation has asked Interglobe and GoAir to ground some of their aircrafts that have the faulty engines that have been supplied by Pratt & Whitney, which is PNW. Now, remember, these faulty engines issues is not just company specific. It's a global issue that has been facing a lot of aviation makers. And the flights have now been grounded. Not just that, Interglobe has also cancelled 47 flights across its domestic network. Interglobe has come out with a clarification where they've said that these are safety issues that they have to adhere to, because of which they have cancelled these flights. They are reaccommodating all the affected passengers on other flights. The passengers have also been given the option to choose another flight at no additional cost. Now, this is, of course, the safety issue on one hand. On the other hand, what about the revenue loss that Interglobe Aviation will see? A lot of analysts believe that there is no material disruption that the company will see as of now because of this grounding. In fact, Kota came out with a report saying that Pratt & Whitney will make good the losses that Interglobe Aviation will see. So that's an arrangement that Pratt & Whitney has had with Interglobe Aviation. Not just that, they also retain a buy with a target price of 1,500. Kotak is quite bullish as far as the aviation sector is concerned. Remember, the passenger traffic growth came in at an 11-month high in the month of January. So fundamentals are looking good, but because of these safety issues, some grounding of flights is what we saw today. Back to you.
Okay, all right, Sonia, thanks so much for that. Well, we also spoke to MOS Aviation, Jayant Sinha, just a short while back. Let's listen in to what he had to say.
It is a technical matter. There is a clear safety concern that we have with these post 450 series engines, and as you know, DGCA has issued an order that all these engines should be grounded. Of course, Pratt & Whitney, Airbus, Indigo, all of them are working to remedy the matter, but until we are fully satisfied, and obviously in collaboration with other regulators around the world, EASA and FAA, we will have to come to a joint conclusion on whether these engines are safe to put on planes again. And only when that whole process is completed and we are fully reassured will we allow these engines.
Well, the biggest drag in today's trading session is TCS on the back of that large trade that we saw at the start of trade. Dreema, give us details.
Well, Tata Sons, the parent company of TCS, has sold 3.5 crore shares, which is worth about 10,000 crore rupees, or a 1.68% stake in TCS. Now, this is sold at a near 5% discount to yesterday's closing price, which is why TCS is under pressure today. Now, Tata Sons, the parent company, has raised money in order to fund its other group activities. It's sitting on a huge debt. They paid a significant amount to Docomo on account of the liability of cancelling the Tata Docomo Telecom venture. Plus, Tata Steel is looking at some stressed assets. Tata Motors could need some money to ramp up its domestic operations. So Tata Group basically needs money, and TCS is their cash cow. And given the market rise that we've seen in the TCS stock price, this perhaps comes at an opportune time for them to just get some money off the table on TCS and invest it in the other group companies. Also, on a technical factor, the stake sale in TCS will help in increasing the free float of TCS, which will increase its index weightage. So that on the sidelines could be a positive going forward for TCS. As we said, TCS has been an outperformer, the sector in fact, with the stock moving up close to about 12%, with the Nifty down nearly 1% on a YTD basis. But purely for today, it's down on supply pressures.
All right, and also watch out for a couple of those graphite electrode companies, HEG as well as Graphite India. Both those two stocks are higher in trade. They're up close to around 3.5% to around 4%. In fact, we spoke to Mr. Junjunwala, the chairman and MD of HEG. He says that demand is strong for graphite electrodes and he believes it will continue to be strong going ahead. Let's hear him out.
The market remains strong, and we see a shortage of electrodes to continue for some time. Electrode prices don't change on a daily basis like other metals. For the last 3-4 years, the electrode industry has not been in very good shape, and the prices have been in the region of about $2,500, and the prices have gone up beyond $10,000.